We're going to see tariffs imposed on Mexico and Canada from today, 25% tariff. And I think that's just another symptom of the realignment of gold and silver as very important assets in the monetary architecture of the world. I think all stars are aligned for a gold and silver revaluation. And why do I say that? Well, the fact that China, Russia, the BRICS, the global south have been acquiring so much physical gold in the last 3.5 years or so.
On February 1st, U.S. President Donald Trump will officially impose a sweeping set of new tariffs, including a 25% levy on imports from Canada and Mexico and a 10% tariff on Chinese goods. During his presidential campaign, Trump warned of such measures, accusing all three countries of failing to curb the influx of drugs, particularly fentanyl, into the U.S., while also criticizing Canada and Mexico for inadequate efforts to prevent illegal immigration. In response to the tariff announcement, gold prices surged past the critical $2,800 mark on Friday. MarioInnecco sees these tariffs as further evidence of the ongoing realignment of gold and silver as crucial assets in the global monetary system. He believes that all indicators point toward a significant revaluation of both metals. According to Innecco, both the U.S.-led Western financial system and the BRICS nations are positioning themselves for a new monetary framework where gold takes on a more significant role as an alternative reserve asset to U.S. Treasuries. Gold has long served as a safe haven for investors during times of uncertainty, and rising inflation fears are driving more people toward it as a hedge against risk. According to Reuters, gold also benefits from the Federal Reserve's decision to pause interest rate cuts. Since gold does not generate yield, it performs well in low-rate environments. Additionally, China has been steadily increasing its gold reserves, a trend that is expected to support prices further. Innecco argues that for the U.S. to strengthen its economic resilience, it must significantly boost its production of key commodities, including gold, silver, and copper. Drawing a parallel to Trump's push for energy independence, he asserts that the U.S. should drill, baby drill, for oil and precious metals. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
We're going to see tariffs imposed on Mexico and Canada from today, 25% tariff. And I think that's just another symptom of the realignment of gold and silver as very important assets in the monetary architecture of the world. I think all stars are aligned for a gold and silver revaluation. And why do I say that? Well, the fact that China, Russia, the BRICS, the global south have been acquiring so much physical gold in the last 3.5 years or so is pointing to that. And the fact that the new Treasury Secretary, Scott Bessent, said in an interview in early November that he sees a Bretton Woods-like realignment for the world. And he also said that the biggest holding of his hedge fund at the time was gold. So I think both blocks here, the West under the leadership of the United States and BRICS and the global south, are preparing for some kind of gold realignment. And why gold? Well, gold will serve as an alternative reserve asset to U.S. Treasuries. And I think people will still hold U.S. Treasuries, or countries still hold it, but gold will become more and more important. Gold has a long history, thousands of years of serving as a stable store of value. Gold has no counterparty risk if held at home, of course. Gold is accepted as an extinguisher of debt in the four corners of the planet as well. And gold cannot be created out of thin air like fiat reserves or currency by central banks and commercial banks, respectively. And more importantly, gold cannot impose sanctions, as gold is apolitical. So you can see here by these charts how gold has been accumulated quite aggressively in the last few years. We've got good research from Jan Neuenhaus, for example. He's also looked at how the PBOC has actually been buying gold on the quiet via London. He noted that back in November, the Chinese central bank secretly bought 60 tons of gold, and officially, of course, they're telling us that they're buying like 5 or 10 tons a month. The tariff regime, as well, in my opinion, is going to make it even more imperative that America develops not only, again, its manufacturing at home, but also its uh, mining like precious metals, silver, copper, all kinds of commodities. The US is a very rich country in terms of natural resources, but that hasn't been exploited in the last few decades. President Trump said about oil that they're going to drill, baby, drill. I think they need to drill, baby, drill in terms of gold and silver. And it's with that in mind that I've partnered with a company that has some very interesting projects in Nevada, in the US. The company is called Eminent Gold Corp. I'd like to thank them for choosing my channel to bring this message to you. So many of you ask me about opportunities in the precious metals mining sector. And even though I think having physical gold and silver is the ultimate insurance versus currency debasement,
Eminent Gold has reported results from its first drill hole at the Hot Springs Range project in Nevada, marking an early step in its 2025 drilling campaign. The focus is on the Otis target, a highly prospective area that shares geological similarities with the Getchell trend, which holds an estimated 50 million ounces of gold. Nevada remains a dominant force in the global mining sector, with an endowment of approximately 270 million ounces of gold and 700 million ounces of silver. The state plays a crucial role in making the U.S. the world's third largest gold producer, accounting for 84% of the nation's total gold output. With gold prices reaching record highs, Eminent Gold sees strong market potential. According to MarioInnecco, Eminent Gold is well positioned for exploration, supported by $2.4 million in cash and an experienced management team. However, he cautions that investing in the company remains highly speculative, akin to a treasure hunt, offering both significant potential rewards and inherent risks. Let's shift our focus to a video.
Well, the ticker symbol is EMNT in Canada. In the US, it's EMGDF. Eminent Gold Corp has some very interesting properties in Nevada. And what they're trying to do is unlock potential for major discoveries. And their strategy is to drill these properties and then attract acquirers like bigger companies that will develop the properties and eventually produce gold. Uh, but let's start talking a little bit about Nevada because it's a rich region in natural resources. And Eminent Gold's properties are in the Great Basin, which Nevada is part of in the United States. So let's look at some facts about Nevada. Well, Nevada is ranked second most attractive mining jurisdiction in the world, according to the Fraser Institute annual survey in 2023. Nevada's mineral wealth is the following. They have an endowment of around 270 million ounces of gold and an endowment of around 700 million ounces of silver. And the US actually is the third largest gold producer in the world. And Nevada, believe it or not, accounts for 84% of gold production. So let's look at how Eminent Gold Corp will try to maximize the potential of its property. That gold just recently made an all-time high, and the company thinks there is a robust gold market and strong price outlook. I agree with them. The other important point that you'd be getting in right when they're starting to drill. There's a lot of drilling that they're going to be doing slated for 2025. They've got the 2.4 million in cash to do it. They've got the management that is experienced in it. So, yeah, again, I want to stress that it's highly speculative. It's like a treasure hunt. And I admit that a lot of you will probably not want to touch this, but like me, some of you like to speculate, and yeah, that's all it is, in my opinion, a speculation that could turn out to be like a 10 or 20 bagger. I'm not saying that's what's going to happen, but there's potential for that. But there's also potential that it fails. So you have to keep that in mind.
The gold market continues to capture investor interest as it closes the first month of 2025 at a record high, following an impressive streak of 40 all-time highs in 2024. The metal is on track for its fifth consecutive weekly gain, rising approximately 0.8%. Adding to gold's appeal as a safe haven asset, former President Trump's decision to impose a 25% tariff on U.S. imports from Canada and Mexico, starting February 1st, has raised concerns about its potential impact on inflation. With Canada and Mexico being the United States' largest trading partners, the move has fueled fears of rising costs, further driving demand for gold as a hedge against inflation risks. Gold is closing at a record high in January. Do you think this trend will continue throughout 2025? We value your thoughts, so feel free to share them in the comments. If you found this content valuable, please give it a thumbs up and remember to subscribe to stay informed. Thank you for being part of this journey with us.